One day the owner of the valley's largest depot, an old wolf, gathered his pack and said, "Our depot is going to grow. New grasslands are in our hands, we're going to open new routes, we're going to take on new wolves and move forward. But for this there is too much meat available. I alone cannot meet the amount." The wolves in the pack looked at each other. The old wolf continued speaking, "There is a proposal here. Give me meat. In return I will give you a change that is a piece of this depot. As the depot grows, your share will grow too." That day, in that valley, the first stock had been sold. And that was exactly what the stock market was. But now I'm taking a step back. Because when most wolves think of the stock market, complicated numbers, incomprehensible details, and a game played only by rich packs come to mind. And this thought keeps most wolves away from the stock market. But the stock market is based on a very simple idea at its core, owning a small piece of something big. Let's make this more concrete. Think about the valley's largest meat depot. This depot serves individual wolves every day, it grows every season, it processes more and more every year. If you wanted to own this depot, what would you do? In the old world the answer was very simple, either you bought the entire depot, which requires a very large pile of meat, or you just watched from the outside. But the stock market introduced a third option, you can buy a small piece of the depot. The real name of this piece is a stock. When you make a stock agreement, you become a real friend of those developments. If the depot never makes a profit, you can never earn profit in accordance with your payment either. If the depot grows, the value of your stock grows too. But if the depot suffers a loss, the value of your stock decreases. So a stock means being a partner in both the success and the failure of something. So where are these stocks bought and sold? This is where the stock market comes in. The stock market is an organized market where stocks are bought and sold. Think of it as the largest organized market in the valley. Individual-sized stocks are listed here. Thousands of wolves buy and sell these stocks every day, and prices constantly change. This change happens based on the instant decisions of buyers and sellers. If too many wolves want to own a business, the price of that stock increases. If too many wolves want to sell the stock in their hand, the price of that stock falls. It's that simple. And that complicated. Now here, in turn, this needs to be asked, what determines the price of a stock? In the short term, price increases of a stock take shape according to the requirements wolves have for that business. That is, not according to real value, but according to perceived value. If wolves think a depot will grow very much in the enduring season, it causes people to buy that depot stock at a high price. Because they hope it will become even more valuable in the future. But if this expectation doesn't come true, it collapses from the price. That's why short-term prices in the stock market, most of the time, reflect not reality but the hopes and fears of wolves. In the long term, however, the picture changes. A long-term price can be used together with how much profit the distributed thing makes. The price of a wage that grows regularly over the years, that earns profit regularly, also goes upward. The price of a change that consistently loses value over the years goes downward. For this reason the wolves around are saying, the short-preferred stock market is a voting machine, while the long-term one is a weighing machine. In the short term what wolves will do wins, in the long term real value wins. And these distinctions contain the most important truth about the stock market. Now there's another topic that needs to be addressed here. What knows their own prices is not limited only to those characteristics. Things happening throughout the valley directly affect stock prices. For example, when the Grand Council raises interest rates, the stock market generally falls. Why? Because of high interest, the cost of borrowing increases, it breaks things into pieces, and at the same time it offers wolves who are saving an alternative option, earning interest instead of taking risks. For this reason, when interest rises, many wolves exit the stock market and move towards safer investments, and this situation pushes stock prices downward. Conversely, when interest falls, the stock market generally rises. Because very little is earned from safe investments anymore, and this pushes wolves toward the stock market for higher returns. This relationship between interest and the stock market is a fundamental dynamic that even the most local investor wolves of the region cannot overlook. Now we understood how the stock market worked, but now we're looking for this question: why does a business enter the stock market? Why does a depot owner sell part of the depot to foreign wolves? The answer is simple: to grow. When growth is desired in a depot, a very large amount of meat is needed. Buying new grasslands, spending on new equipment, taking on new wolves, all of it requires a very large amount of resources. Instead of meeting this resource alone, the business sells its own stocks on the market and collects small distributions of meat from hundreds or even thousands of wolves. In this way, it creates a very large resource pool in a very short time. And in return, the wolves who take these stocks become its friends. The beauty of this system is here, both the business wins and the investor wolf wins. The business instantly reaches the resource it needs for growth. And the investor wolf catches the opportunity of becoming a friend of something big with a small amount. But of course, things don't always go this beautifully. The most dangerous side of the stock market is the psychology of wolves. When stocks are rising, everyone wants to buy. Because thinking everyone is winning, I'm winning too, creates a very powerful one of its. This keeps wolves going, continuing to work even when prices have risen too much. And in the end, prices go far above real value. This is called a bubble. The more the bubble inflates, the harder the pop will be. And when the pop comes, those who bought last are those who suffer the most damage. Because they bought them at the highest price. So is it possible to see these bubbles while they appear? Partially. There are some signals. If the price of a stock is very high when compared to the real profit of that market, this is a warning sign. If wolves from the cut of the valley are pouring money into the stock market and saying this time it's different, this is a very powerful danger signal. Before every large bubble in history, there were wolves who said this time it really is different. And they were wrong at almost every opportunity. Now let's move on to right now. So is the stock market only for big packs? Can a small wolf enter the stock market? The answer is yes, but on the condition that some important rules are specified. First, short-term speculation is very multi-purpose. Today, sitting in the future, the logic of quick gains often starts with dreams and begins for inexperienced wolves. Because predicting the short market is almost impossible. Even the large majority of the most local wolves of the valley cannot be estimated in the form of short-term movements. Second, having a long-term perspective is much safer. If a wolf deposits a small amount of meat into the stock market every season and continues this for 20, 30 seasons, short-term currencies continuously become unimportant. Because long-term valley economic growth, and this growth is reflected in stocks. Third, diversification saves lives. Depositing all the meat in a single depot, or if the depot sinks, everything getting completed, means losing everything. But distributing the meat across many different businesses, many different sectors, in the event that one piece sinks, ensures the others consciously spread. Fourth and finally, the stock market is a place where patience waits. The stories of wolves who get rich quickly are talked about much more. But the stories of wolves who invest regularly throughout the year and become wealthy are rarely heard. Because their story is boring. And when it comes to the stock market, being stuck is most of the time the most patterned strategy. Now let's look at the financial performance of the stock market here. The Valley stock market has been extremely volatile and unpredictable in a short time. In some seasons, stocks lost half their value. In some seasons, 2 periods formed. These currencies make short-term currency exchanges look like a real place. But regarding the long-term picture, the picture changes completely. Over the course of dozens of seasons, even centuries, the Valley stock market was regularly on its feet. There have been crises, there have been opportunities, but at every opportunity the stock market recovered and rose to the peak of its previous peak. This reality gives great assurance to wolves investing in the long term. No matter what happens in the short time it remains, the wolf who can wait long enough has normally won. Of course, past performance doesn't guarantee the future, but the real course is so strong and so much so that it is difficult to overlook. And another important dimension of the stock market is this: it can be within individual limits, but investing with the entire stock market through an index fund is much safer. What is an index fund? It is a basket that holds the stocks of the 100 or 500 largest behaviors in the valley together. This market purchase profit, you become a partner simultaneously not to a single business but to all of the valley's largest owners at the same time. This also ensures that in the event of any liquid sinking, your loss remains very limited. Because the other total businesses are on their feet. And this is the essence of the stock market, becoming a partner in the sizes, benefiting from capacity, and being able to wait without panicking. It looks complicated, appearing in an extremely broad way at its core. You are becoming a partner in someone's business. If they grow, you grow too. But this place also needs to say this: before separating for the stock market, there are a few questions that the continuing self needs to ask itself. First, would my life be turned upside down if I lost this meat? If the answer is yes, that meat should not be put into the stock market. The stock market can cause large losses provided in a short time and ensures another source forms to cover those losses. Second, when is it possible for you to withdraw this investment? If it will be needed in a few seasons, the stock market is not the right place. Because in a few seasons the stock market can be very low, and being forced to sell at exactly that moment means a big loss. Third, is it possible for me to have enough knowledge about which businesses to invest in? If no, it is much more sensible to choose an index fund rather than picking an individual stock. Because an index fund ensures investing in the entire valley at once from the operations of which business you will go to being carried out. A wolf who answers these questions honestly and acts accordingly transforms into a wolf who hasn't understood the stock market but is allowing the stock market to function toward itself. And this is a much more powerful position than it appears. Finally, this needs to be said, the stock market is the most democratic wealth tool that exists. In the past, only large PACs could partner with large businesses. Today, however, with a small amount, any wolf can become a partner in one of the valley's largest businesses. This opportunity, all at once, has never been this accessible before. And the wolf who knows this, uses this, and can wait patiently, allows it to work for themselves over time. And as always, let's not forget, the wolf pack is much stronger together. But I want to use these song lyrics here in a slightly different way. The stock market is also actually a kind of system of becoming stronger together. Small volume wolves, the fattening of small volumes, give collective support to the largeness of large pieces. And as those businesses grow, both the business and the investor wolf and the entirety of the valley benefit. The investor wolf profits, the business grows, the growing business employs more wolves, the more employed wolves spend more, and this spending energizes the entire valley much more. The stock market is not a tool for a single wolf, but one through which the entire valley can succeed together. And for this reason the stock market, when understood, is not its mechanism, but on the contrary an extremely very consistent system. If you want to learn what other operations wolf economics applies to, you can check out the suggested videos.